All right, welcome back for the episode of Carnivore Trades. Today is Monday, December 4th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here having a pretty big decline, I should say, relatively speaking, to what we've been accustomed to. In fact, if we go back, you got to go back to the 9th to find a day that we were down this much, and again, it's really, I mean, it's only 0.5% on this on the SPX, so it's not like a huge decline, but it's the biggest decline that we've had since the 9th, and then really since obviously the 27th, when we were just selling off, almost every day. But in any case, the markets were able to kind of claw back here and finish, at least kind of pair some of the losses here. We did close near the highs of the day, still below that 45.70 area. And I guess where the low of the day was, everybody should know it, 45.50 area, right? So that level getting checked on one more time. And ultimately markets are holding up. They still, they still technically can go higher. There's nothing really broken with this pattern here. That said, we are still, we still have had an incredible run here, and there are certain areas of weakness, such as big tech. Triple Q's down 1% on the day. Actually, was down almost 2%. We got pretty close, I believe. I think it was down like 1.8 or so at one point intraday. But the Qs here, again, you see they ran a test of the 20 moving average. We came off of it. The big level, and I've talked about this last week, but this is the big level right here. So 386.05. As long as we're above that on a close, this is fine. And they saved it by the skin of its teeth by the end of the day. But if we close below that, that's a failed inside bar pattern, right? So you see here, you got the mother bar, and you've been inside of this on a closing basis ever since that. If we close below that on a daily, I think that's going to set the door up for some downside here, further in tech, and likely the markets, as there's, market is just so tech weighted at this point. Obviously, gap fill, that's going to be an obvious area here. And then, of course, you got these moving averages down in that range. If that does indeed trigger, again, that has not happened yet, but that is, obviously a possibility. We do have some more economic data this week. I believe tomorrow, JOLTS, that's going to be a big one. ISM, non-manufacturing PMI. Then Wednesday, ADP, that's going to be a big one, as is, of course, jobless claims and non-farm payrolls will be the big data release on Friday. So a lot of data to get through. But you can see here markets right now, again, nothing technically terribly wrong. But again, watch that level on the Qs. I think that will dictate everything. Now, everybody's talking about the Russell right now. IWM here up another 1% on the day. So that's been a monster trade here. And we talked about this nice bull pattern, and that is continuing to push higher. I think this can get, and here's your target. I'm going to just adjust that a little bit. There's your target. So 189 or so. I think it can get up to this pivot even, just based on the strength, based on the volume that we're seeing there. But everybody's talking about the Russell, like, we're rotating out of tech and into small caps. I don't really think it's rotation so much as it is just short covering. And you might say, well, what's the difference? The difference is dealers are covering shorts. It's not like legitimate buying. So, all year long, the Russell has gone nowhere. A lot of puts being bought on this. This has been the weakest index out of the four all year long, right? December OPEX is the largest equity OPEX because you have the leaps there. What happens 30 days, what happens within the last 30 days of a window's life, the most amount of decay, right? Ever since November 17th, which was November OPEX, we've really started to see an upward bid here. So dealers being forced to cover as those puts are expiring, right? Puts are decaying and getting farther and farther out of the money, right? If the Russell was still selling, then they wouldn't need to cover because those puts would be closer to in the money, right? Likewise, the triple Qs here are the weaker sector, right? A lot of calls being bought on those last couple of weeks, right? The Magnificent Seven is what literally dragged this entire rally up. But as that started to cool off, you're seeing those dealers start to exit those positions as well. That's a possible theory here. And I do think that correlation where Russell up, NASDAQ down, likely continues into December OPEX. So that's something that we should keep keep an eye on here. You could also say the same thing for the Dow. Remember, really the Dow sideways. Like here's a yearly chart of there's a 1 year chart of the Dow. We've gone sideways up until now, right? Up until the 30th of October. But you look at the spiders and the Qs, they've been going up. The Russell has been going sideways to lower all year, right? So now those calls are decaying puts are decaying on the Dow. Dealers are buying back, and you're seeing it really start to get an underlying bid. So I do think this kind of relationship continues here. Again, banks, healthcare, a lot of puts being bought on banks this year, right? Obviously with the regional banking crisis, right? Healthcare was at the lows, VNQ, these are sectors we talk about every day. They're getting a benefit here of that kind of buyback effect. So just something to consider here. Overall, though, market's a down day. It could turn into more for the SPX if we can close below 45.37.24. I think that opens the door for 4,500. This is just a short-term level, but the big one to me really is that 386.05 area on the Qs. Anyways, we talked about the Russell. I like that to 190 or so. The diamond here, inside day, down just 11 cents, but nothing terrible there. You can see the intraday wasn't doing anything. Again, we'll give this the upside bias. Honestly, I'll just say 365 and then double top for the diamond. Semiconductor is definitely a weaker sector here of late, down 1.5% there on the SMH. We did close below the 20 moving average. Didn't quite fill that gap. We did hit that previous pivot going back to August, and then we bounced off of that. But we did close below the 20. We'll see how that reacts tomorrow. If this can't get back above this little gap window, 159.52, could be setting up for a move lower here. Again, targets on the downside, 153, and then, right into these moving averages around 151, 152. Could be an area of interest. The SOX, again, did test the gap. Again, you get below that, you're going to this gap there as well. All right, IGV, down just like everything else, down 1.25. It got up all the way up to that trend line, that red bar high there. Didn't quite get to it, and then we pulled back here today. This is acting fine. What you wouldn't want to see is a gap down below all of this, because then you could get an island there on the cloud software. But right now, no problems here. Inside day, down 1.25. Like a lot of these stocks have had really big runs, like CRM, Intuit. These guys have reported earnings not that long ago. Workday, Snowflake, and they need to pull back and stall out. But again, IGV holding up just fine. Again, another sector here that's acting well is transports. So up another 40 basis points. Again, another thing that didn't do anything all year and then sold off. And you're seeing that laggard ship rally here. You could make a case here. You could make a case on the transports that you have an inverse. So, and that would take you up to 16.8, which is, basically right up to the high, basically right to the highs of the year. You'd make a fresh new, really like multi-year high, essentially, going back to 2021. So that is possible. It will not do that in a straight line. You've got resistance here at 15.6. We talked about that, maybe overshoots to 15.8. But that's something to keep on the radar here. I'll just move this over so it's not in the way. But something to watch there on the DJT. And again, that is shaped up much better here in the near term. If you close below 15.2, that pattern's negated and it's no longer a valid look. All right. Interest rates did get a bounce here. And again, I talked about this on Friday. I said I was a little surprised that they only bounced for one day and then they sold right off. Sometimes you can spike a level, though, and then you can kind of come right back up the next day. It's not always, that's why I tend to go off of weekly close more than just a daily close. And coincidentally, this was a weekly close, but we still got a bounce anyway. This is the 2 year here, obviously. If we can get back above the 200 and then back above this red, I think this can still go to 4.8. So I would say that's not necessarily dead in the water just yet. But a little bounce here today, and rates did get a bid. Again, the 5 year held the 200 there. Got a little bit up there. 4.4 would be your next level. If we continued up in the 10s, up 5.8 basis points there. 4.4 could be your upside there. You got the 150 plus those pivots there. Again, this is all contingent on this bounce continuing. And then there's the 30 year, which was the weakest. But again, still into a big level here, and we'll see. Again, even if it does come down, there's a lot of support at 4.25 and 4.15, 4.2, and then 4% is kind of your big level there. On the upside, if it continues to bounce, again, we'll look at 4.6, maybe 4.75. All right, so XHB hanging in there okay. Again, another bid up 67 basis points. That can make a new all-time high tomorrow. So it's really just a stone's throw away at this point. It can easily get there tomorrow. We'll see. It is a double top, so that will be some resistance here in the short term. A little overbought going into it, but right now there's no real problems with XHB. Had a nice consolidation pattern. And we got another bid here today up 0.2%. Again, overbought, but it can still go higher here. But we'll watch that resistance level tomorrow. VNQ just continues to push. So again, these trades that haven't worked all year are now working as we get towards the end of the year. Again, there's going to be a lot of resistance in this zone here. So in this area, right around 85, 86 area, there's going to be some good daily chart resistance. After that, if this can consolidate or get enough momentum, I mean, maybe we could see $90. But again, we'll take it one day at a time here. But this little zone, there's going to be some buyers trapped there, and they will likely turn into sellers at some point soon. XLF, so officially touched this pivot high, pulled back in, but down just 4 cents again. So the sector is still remaining strong, still seeing a good underlying bid. If this starts to pull back, again, we'll look at this trend line here. We never really back tested it, so that could be a thing in the future. You'd also watch potentially for these pivots here around 35. Just get that a little bit closer. There we go. Let's say we pull back in here, and now you've got two levels, right? You've got the 35 handle, those pivots, and that trend line. So a nice little nexus of convergence of areas there. You'd have the 100 moving average kind of upsloping underneath it, but that could be a pullback target for the XLF there. Again, similar to VNQ, there's weekly supply here. There's a weekly red bar high, a big breakdown bar on volume. There's likely going to be sellers in this area, so we'll look for some consolidation. On the XLF, KRE still chugging higher though, up 1.39. Again, possible little sell zone, so just be aware of that. But it's acting much better, and obviously the chart has shaped up. There's KBE working on new highs, local highs anyway. Got very close, so 42.61. So technically we did pierce it by 3 pennies, close below it. We'll see what we get here. If we can get through that high, there's nothing to say it doesn't go to 44. So interesting. KBE holding up pretty nicely, and again, I would give these the upside bias. Granted, they are a little overbought into some resistance potentially, but when you get these squeezes, they can go a little bit farther than you think sometimes. XBD here, again, 510 is your next level. Then after that, it's all-time highs. So that is continuing to play that pattern out there, and I don't see any problems with that one right now. On to commodities here. Crude down 1%. This is probably getting down to that 68 area. So that's what I'm looking for on crude here. And as soon as you get below this pivot, I think it's going to dump out right into this range. That may be a buy. It may not be. We have to see how quickly it gets down there. But ultimately, I do think it's going into that area. And again, crude down 81 cents here, and definitely on the weaker side here today. XLE was weak in sympathy, down about 0.5%, but really nothing terrible overall. This pattern has been very tight. We've been in a range here, but you do have now a weekly red bar with an inside, bear flag essentially on the weekly. So this could be setting up a move lower. So just be aware of that on the XLE. A little bit on the softer side here as we consolidate. Could be a bear base. You see the XOP there as well. Same thing, red bar inside. So that could be setting up for a move lower here. The more we do this, the less I like that 130 handle, or even a pierce of 130. OIH, again, same kind of look here. But I think, if we get down into 280, I think that's a really good level there. There is a little bit of support at 290. Previously, I would have said 300, but you're consolidating too much now, so I don't like it. 290 could be a speed bump, but I think the 280 area is much better. And again, we'll see what that does here over the next couple of weeks. CCJ, again, holding up just fine, up 1.25, no real problems. It's overbought on the monthly time frame, parabolic on the monthly time frame. Just keep that in mind. URNM, that still wants to get to double top around 52 and change. Nat gas pulling back in, again, essentially testing the 200 and then coming off the lows there. We based here for about 4 months. So we'll see what this does here. Again, you hit the 200 and it got a bid. I don't really have a good read on it right now. I'd like to see what it does. And if it can get a bounce and put in a more defined pivot, then we can talk about possibly getting back up to 3 and then kind of go from there here. But it's been kind of a chop fest here the last couple of weeks there on Natty. All right, dollar index here. So this is remaining strong here. So again, we talked about this on Friday. I said, look at the, the dollar came in, but this pattern is not terrible, right? You still have a nice like bull flag forming despite the outside. This is a 4-hour, by the way, despite the outside reversal. And again, it curled back up here and actually pushed up okay. And if you look at the intraday, nothing really wrong here. So just kind of a consolidation pattern there on the hourly and 4-hour. If this can hold trend here, I think it wants to go back up to 104.35. So that would give you a bid. And then if you can get through that, you can get to 105. So again, a lot of stuff going on here in the market. The dollar is green. The market was red. If this continues higher, that's likely going to put pressure on the market, obviously. And then we'll watch that, again, the 386.05 level on the Qs. If that gets closed below, I think there's more downside in stocks. But right now, DXY holding up here. And we'll leave it at that for now. Now on to what everybody wants to know about here. This is why I stress not chasing. I talk about it all the time. Some of my members are asking me, Aaron, should we buy gold? Should we buy gold? Should we buy gold? Should we buy gold? Well, we need to buy. Don't don't chase, because for all we know, this is another multi-month, multi-year high, and you're going to be stuck holding that bag at 2150 for a long time. So again, trend line, we got above it on a weekly. I want to see a monthly close above that though. So we'll see. They came in here. Now there was definitely somebody, by the way, there was a 5% range on this today. That is unheard of on gold. Somebody got blown up based on Friday's close. You can see here on Globex, somebody got margin called based on Friday's close, and a short seller covered very quickly. And it blew up, and then it came right back down. That tells you that's exactly what happened. And then somebody, JP Morgan, got in control of this and pushed it a lot lower here throughout the day. But what an amazing reversal there, engulfing candle with heavy volume. So that looks like a major top in gold. Now that doesn't mean that that doesn't mean gold's gonna crash. But it's at least a significant top here for the near term, near to medium term, perhaps. We'll have to see how it shakes out tomorrow. You do have a gap to fill, as I've said repeatedly, so that's probably going to get filled here soon. And then we have this trend line down here at 1950. But big reversal there on GC futures. GDX actually held up okay, down 2.5%. We did close below Friday's low, but pattern-wise, this is not terrible. And you still have the inverse head and shoulder. So that's your positive for GDX. So we'll see how that shakes out. You don't want to close below that trend line. That would be a big negative. Silver here down 3.7. What an outside move, right? This is why you don't chase. So don't do it. It's not worth it. We'll take a look here. Big sell hitting 26 handle. Massive reversal. We'll look at this at 24 bucks here. But big move there in the commodities market today. Obviously the metals were the star. Platinum here down 1.3. I like that on a pullback. I believe that can be bought on dips, as you guys know. Palladium, a little bit weaker here, but I do like this zone for long-term accumulation. Copper also went under the radar today. Everybody was focused on gold, but down almost 3%. Big move for copper, engulfing. So again, I talked to you guys about this Friday. I said I wouldn't rule out, I still wouldn't rule out a move down to the lows here. Now, again, we did close above the wedge on a weekly, but pretty good engulfing candle. So who knows? Maybe it was a fake out. Time will tell here, but definitely a pretty good reversal in these metals. And we'll see how this shakes out here. Again, I would say 375, 376 is going to be support in the near term. And again, you got a gap to fill at 375. Contract gap there. So we'll look at copper there. But big reversal here across the board on those metals. And again, Exhibit A is why you don't chase things. Speaking of don't chasing, Bitcoin here continuing to run up another 4.7. That hit 42K today. I think this can get to 48, believe it or not. I'm not saying it does that or making a prediction. I'm just saying that's kind of like the max move I would see here. There's a little bit of a pivot at 44 as well, right there. You can kind of see. So maybe it could get there. It's not that far away. But big move there for Bitcoin. Ether, we talked about this bullish pattern here, then that continuing to push higher. So that's playing out nicely. I think ETH can get to 24, right? So if you can get to 20 and maybe even, 25, if it really gets going, 28. And I'm only saying that just because it's possible. We've seen crypto do crazy moves before. But yeah, nice move there for the coins. Polkadot hanging in there. That pattern is still fine. Doge getting a nice bid today. XRP, a little bit of a sloppy pattern there. Solana was actually red, but this pattern is fine. So again, Bitcoin hanging in there okay. And up to the 42 handle, we'll see how that shakes out. Again, it is very overbought. Just keep that in mind. But, things can get more overbought. So anyways, so again, spiders here, a little pullback there. That is a fake print there on the SPY there. We did not get up there. Don't have it on the SPX. But bottom line, for bears, you need to close below 43.37 to unpin us from the 45.50 area. That, or you want to close below 386.05 on the QQQ. Until that happens, this market's still in place just fine here and can retest that 4,600 handle potentially. Anyways, I'm going to wrap it up here, guys. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.